Hey guys, welcome to another webinar. And it's actually been a while I've been on. I hope you guys have been doing good. I hope you've been having a wonderful time, in your investments and all of that. Just a quick story. I've been like in Africa from I think last year, and I've been super busy. I've been running multiple companies at the same time, and I haven't really had time to really come here and do much. So today I got a little bit of time, so I'm just gonna do one or two things and let's look at the market. Now, keep in mind, since it's a new year, as you know, I normally invest in probability in the year, but since I haven't been around, I haven't really invested in probability this year. So we're just flying with seasonality and CO2 report. If you've never been here before, jumping in at this stage is I welcome you to jump in. Nevertheless, you won't understand much. So you might have to go back to the previous videos in the webinars and watch. But please sit along, tag along, and enjoy the ride. Right, guys, let's go straight into it. Let's look at gold. Let's gold CO2 report. Guys haven't been here before. This is commitment of traders report and basically shows what the commercials, non-commercials, and non-reportable are doing. We only focus on the commercials and we focus on their changes, right? If they're going long, which means if they're buying, and if they're going short, means they're selling. And also, if you're paying attention to what's happening with the United States right now, the layoffs and all of that in the tax section, you can see if you trade stocks, you want to look at companies that are in taxation. So there's two companies that are in American taxation. I wouldn't say the names right now, but those two companies, for example, when they announced that, there was a dip in their shares about, I think, 3% or so. And those type of stocks are stocks to look into because as the layoff continues, there's most likely going to be more drop in their share prices, as time goes on. And you have to keep in mind some of these people are actually investing into those as well, those assets as well. So when they drop them as staffs, they don't they want to take out their money as well, all of that. And also there might be delays now in the tax section. There might be delays, and we might want to look at the companies that would be affected by these delays that's happening, that might happen in the near future. Because if you're dropping about 5,000 staffs, you need replacement for them. And if you're using AI, you know, how quick would the AI learn, their task and put it into work? Are some heavily human, reliant or less human reliant? You get those type of flows is stuff that you have to consider. So now let's go back into CO2 report. Gold doesn't have anything. That's why I said if you've never been here before, you wouldn't understand. So what we look at is changes. If gold has some long position and short positions. Right now, they're taking out positions from long and short. I'm into more stable asset. As I say, I'm managing a lot of companies. These guys are AY to like literally jolt your blood pressure up if you don't know what you're doing. Their return on investment is quite low, but I do enjoy investing in them when the opportunity shows. But right now, I just want to go for something very easy, very smooth, S&P 500 style, something that gives me peace of mind. Let's go S&P 500. Let's see what's in there. We're looking at long and short positions. Right now, in the changes, they're investing in a long and also in a short at the same time. And what that means is it's not ready, basically. Go to the next one. NASDAQ, what we're saying. Same thing we see here. They're investing in the long side and also the short side. So we wouldn't take NASDAQ, neither Dow Jones. And this is a beautiful, beautiful thing about investing, right? This style, because you don't need to do too much. Just need to come here, look at it. If one is green and the other is red, you're good to go. If both are green, you're not good to go. If both are red, you're not good to go. And you just have to look which one is green, which one is red. Long, short. Long is going up, short is going down. So if down is green, then you take it. If up is green, then you take it. It's like a lift, isn't it? Are you trying to go up or are you trying to go down? But whenever it's green, I go for it, basically. Whenever one is green and the other is not green. But obviously, there's still more stuff in behind the scene. And looking at those, you don't really see much, in this indices. Let's look at, you know, let's look at something a little bit more stable, soft. These guys are seasonal. Uh, doesn't look good. We do not have the seasonality data for this, by the way. But I like looking at them, and we can also invest in them in the next run. So, but most of the time, the COPT report that tends to give you, um, an idea. The way I tend to do sometimes is I tend to go on TradingView when I see some of these guys and I trace the month, right? So if the month now is February, now I look at it, February last year, was it dropping February last year? The year before that, was it dropping? The year before that, was it dropping? So I do a mental map of my own seasonality. And because of the assets, they tend to follow that same structure most of the time. Out of, if you do 10 years or do 20 years, go back and do a calculation of that. By the time you do the percentage, you might end up with 10, 20%, But once the seasonality is available, you can always see that like in 1 second. Just go there, look at it, if it's there. So it's like check sugar and stuff like that. So yeah, this looks like they're going very high on the short side and not too much on the long side. But yeah. So guys, you've been here before. I mean, some of you might want to look into crude oil and all of that, but I'm not looking into guys at the moment. Oh, this looks good. Yeah. So this looks good. WTI looks good. But I don't have a seasonality for these guys, so um let's look at natural gas. This looks good as well. So we might expect to see natural gas going on alongside. Now, keep in mind, guys, this for educational purposes only. I'm not saying, you should go into the market and go do this or do that with your money, but I'm looking at what the COT report is saying. This information, COT report is quite free for everybody to look into. It's their freedom of information. Actually, we all have it. So yeah, these guys are looking good. So if you're into energies, you might want to look into that a little bit, you know. But crude oil looks good, and maybe natural gas because the short side is quite small. It's quite negligible, 16,000 to 454. Seems like a no-brainer. So, all right, that's all I have for you guys in this session, and I'll catch you in the next one. As I said, I've been extremely, extremely occupied, and yeah, when I get some time, I'll definitely come up and do some videos for you guys. All right, guys, take care of yourself and enjoy the rest of your, investing week. God bless you all and stay blessed.